Subscribe to our YouTube channel for in-depth interviews of India Inc. and press the bell icon so that you do not miss our updates.
Hello and welcome to Nirmal Bang, ladies and gentlemen. I'm Nirmal. We have with us Mr. Pankaj Mital-COO, Mr. GN Gauba-CFO, and Mr. Kunal Malani-Head Strategy and M&A from Motherson Sumi joining in. Welcome to the show, gentlemen, and always a pleasure to have you. Let me first start with Mr. Gauba. Mr. Gauba, post the impact of COVID on business, the company has seen a robust recovery, and that we've clearly seen in the third quarter numbers. How have things been post the unlocking phase? Because yes, there was trouble in the first two quarters. And what would you actually attribute this recovery to?
Thanks a lot and having us on the show or talk. I think you are absolutely right. The post opening, we have seen a good demand coming back. And in some sense, this was something which was already planned because we established 41 new plants in the last 5 years. So, and we don't establish a plant just in anticipation of a demand. We establish a plant once we have a specific order. Quarter three, we reported our highest ever revenues. Apart from, of course, the top bottom line was also the best for Motherson. The robust demand is contributed in by way of two factors. One, there has been opening post-COVID situation. There is a lot of focus, a lot of requirement which comes back on the private vehicles because if people have to go to office, they have to do economic activities. So the private vehicle becomes the most preferable route. And this is what we also understood when China was first one to recover. The second part, of course, in the last 2 years, particularly in some of the markets like India, we had seen that people were waiting for things to settle down. So as soon as Euro 6 or Bharat 6, as the things finally came clearer, people have gone for a private vehicle or those things. So we are quite optimistic and we continue to be optimistic that the demand is here to stay.
Right. So clearly, the recovery is something which is sustainable. Mr. Mittal, coming to you, in terms of operations as well, are we back to pre-COVID levels?
Yes, more or less. Most of the plants are operating at good capacity levels, and we are back to where we were. And barring some places where there will be some impact, but I would say majorly we are there.
Right. And Mr. Mittal, so what is our current capacity utilization if you have to see on a blended basis?
See, generally, we are happy if we are hitting something like 80%. In many of our businesses, you can't easily see capacity utilization per se, but that's where we start to expand. If we are going beyond that, we get into a phase where we start to look for more plants to support that. So we are at a very good level.
Right. And with this, another follow-up question, Mr. Mittal, I want to take with you is with regards to the kind of slowdown that we saw in terms of 2018 and 2019. Uh, how far have we already moved from that slowdown that had hit us?
Well, as an OEM supplier, you know how the industry is performing and how there's a good traction in the market. The volumes have been good. So we are in sync with that. And as we had said that we had got so many new orders and which have been in the execution phase, and now they're in place with new plants being there. So that's how we are very well phased out in that sense.
Right. With this, another aspect that everyone's watching out for is with regards to where the restructuring and the reorganizing is concerned. Kunal, if you could just help us understand where are we right now in this entire planning of restructuring and reorganizing? Where have we reached?
Okay. One, I think I'm very pleased to announce that we have finally got the approval from NCLT to hold the shareholder meeting. This is being scheduled for April 29th. On February 17th, we had released some additional information just to update everyone about what the progress has been since July 3rd announcement till now. And in that, we had also put across, some of the key questions or queries that we had received in this period from the investors. We have shared answers to some of those for everyone's benefit. So that should hopefully help everyone get a good understanding of what this reorganization is and how it is helpful. I'm also very pleased to say that what we had said will become an EPS accretive transaction in FY22 has actually become EPS accretive in Q3 FY21 itself.
Okay.
And we have put that in the FAQs as well. So for every minority shareholder, they would now get 8% more share in the profits of the company than they would have got pre-reorganization. And the same thing at an EBITDA level will be more than 11%. Now, as we see this traction going forward, the accretion should hopefully improve and provides a good amount of let's say, increased profitability, increased support to the minority shareholders. As what we had promised in FY22, we are delivering it much in advance.
That's a good thing to hear, Kunal, as well. Now, with the kind of progress we're seeing with regards to our business goes, now that we are going pre-COVID levels, Mr. Gauba, what would our current order book be? And as a company, are we infrastructure ready to complete the order book? Or do you think we will need some more pumping that will be needed? Mr. Gauba, you're on mute. Yeah.
Okay. Thanks a lot. As you are aware, we give our order book every 6 months. So the last order book we gave was on 30th September 2020. And the order book which is given for SMRP BV because the wiring harness business is fairly matured and is dependent on many engineering changes, etc. So the last order book was 13.1 billion euros, which is equivalent to more than 132,000 crores in Indian rupee. And these orders will come into play in next 18 months or so. What is important is that 21% of this order book is for the dedicated electric vehicles programs. So as you can see that while we are agnostic to powertrain, our order book contains substantial a portion of the electric vehicles, which is also now somewhere the OEMs are making their plans to do that. Coming to the infrastructure, the current order book which is there, we will be able to service from our existing facilities. So there are no large greenfield investment which are emphasized for this order book. So as we get more and more orders, we hope we will have to establish more and more plants. So we look forward for that.
Right. So Kunal, as Mr. Gauba just mentioned about the electric vehicle split, how well is that fitting into the business model, and what's the kind of revenue share does EV take right now, and how do we see it expanding in the future?
Look, interesting you asked this question. This is the first time in Q3 that we release some information on the EVs in our order book. Right now in our order book, which is defined as something which we haven't produced as yet, 20% of our order book is actually driven by EVs. This is the order book from SMRP BV's perspective. And right now, 5% of our revenues come from the EVs. So you can see clearly the direction that probably the world is going towards EVs, and we seem to be at the front end of being able to capture some of the share in that space. Now, what would be very important and interesting for everyone to understand is EVs actually is very helpful for all parts of our business. If you think from wiring harness perspective, the content actually goes up in EVs, and we're already doing a fair bit in commercial vehicle and rolling stock in PKC. And as India starts doing more, we should be able to do it with the support of Sumitomo in there. When you think from polymers perspective, because these are all feature-rich content and the interior exterior of the car becomes that much more critical, which again means content is going to go up as EVs come into play. And similarly, when you think from mirrors, the aerodynamics element of this will again imply that more camera-oriented systems will come in, which will again imply more content flowing into mirrors. So it augurs very well for us, and we seem very well positioned to capture that now.
And that seems to be the future from here on as well. Moving on from a company perspective, Mr. Gauba, we've been pretty good right now with regards to our repayment schedules, progressing well towards lowering our, leverage. What's the plan from here on in terms of repayments?
We have a track record of prepaying our loans wherever possible, and we did that. We had a repayment of MC bonds at SMRPBV of $400 millions, which we prepaid in September. Some portion, 7.5 million, is outstanding out of that because the bondholders have decided to stay away and not exercise that option. But let that be where it is. We don't have any significant repayments of long-term loans. We are hardly utilizing any of our short-term facilities. So given that our capex cycle for the greenfield is over and the maintenance capex is not very significant, we are seeing debt coming down constantly. And with this comfort, we have also started reducing our gross debt given our comfort on the operating cash flows. So we look forward for more and more growth opportunities. So created a huge headroom for our growth into inorganic area.
Right. And then with this kind of growth, we've announced an acquisition of Plastmed Group as well. What are the kind of synergies, Kunal, that we are eyeing? Because I think closure is still expected in the first quarter of FY22.
Yes, again, pleased to announce that I think that we should be able to close this hopefully within the next 30 days or so. It's a very interesting asset for multiple reasons. One, it gives us an entry into one of the remaining pieces of the world we were not in Turkey. It's a 1.4 million automotive market by itself, and hence has a decent automotive supply chain in there. And we've now got a good partner, which really aids us to be able to grow in that region beyond the product line also, which is mirrors in this case, going forward. From mirror perspective itself, we were there from a licensing perspective up till now with another, related person in there. But now we will be there on our own, and this, asset provides us the opportunity that over the next few years we should be able to capture a significant share of that market going forward in there. And finally, the asset comes with its own tooling or design and engineering associated with this. Which was something which was not in-house in SMR up till now, which will become in-house going forward, and that should again aid significant margin contribution going forward.
Right. So that's with regards to where the acquisition goes. Taking the current market scenario into consideration, taking all the synergies, growth aspects, order book into consideration. Mr. Mittal, what would the business outlook be over the next 6 to 12 months? Are we expecting this third quarter kind of performance to continue?
Well, we are an OEM supplier, and as an OEM supplier, for us to give a short-term view in terms of what we expect the markets to be, it's slightly tricky. What we are always looking at is a 5-year horizon, and as you would have seen that we have a 2025 targets quite, in the public domain. If we have a clear way forward for us as to how we intend to grow. Having said that, we do see that market should remain strong. As you have seen, there are no reasons why there should be some blips here and there. But that's the way the global economies work, and we remain prepared to be flexible at all points of time in serving our customers and in being strong to be the strongest partner as a supplier to them, so that we can keep up the growth and build the trust with them.
Right. Mr. Gauba, as Mr. Mittal just mentioned about the 5-year plan, we have the 6th 5-year plan, which kind of has been announced. If you could just help us understand what would the vision be of the sixth five-year plan?
Thanks a lot. As Mr. Mittal said, we always focus on the 5-year plan. So our vision is to be 36 billion group by 2025. And what is important is that we continue to have our target of 40% on return on capital employed, together with 40% dividend payout ratio on the consolidated profit.
Mm.
Also, what we have introduced or what we have brought in, that 25% of the revenues by 2025 should be coming from the new areas. So this is some thing which we have always been talking about, de-risking the business model. So apart from a policy moving from 3CX15 to 3CX10, no customer, no component, no country to be more than 10%, we have added another aspect that we want to go beyond automotive industry. And when we are talking about these industries, we are on the strengths of the businesses what we have built, and our vision continues to be a globally preferred solution provider. So any inorganic growth or any new facilities what we set up would be at the back of the order or at the behest of the customer. So there is no change in the underlying policies with respect to the vision or even with respect to the financial discipline. But yes, we want to grow to the non-automotive business also, because otherwise the automotive business becomes too large given the global scale of the operation.
Right. And very lastly, Kunal, one another question I want to take with you is with regards to where the restructuring goes. What are the benefits that retail investors and shareholders are expected to see?
Okay, so quite a few. The first, as I mentioned, just financially speaking, they should get a higher share of profits now. And that was very critical because SMRP BV, which was a 5149 venture, which was originally created as a 500 million euro business, had now become a 6 billion plus. And hence there was a sizable chunk of profit, which minority shareholders were not getting access to, which they would get to now. Secondly, with the entire SAMIL business coming into it, it's a much wider portfolio that exists beyond the three larger businesses of wiring harness, mirrors, and polymers. Now we have metals, we have lighting, we have electronics, we have sinter metals, we have services like our own industrial parks and so on. So it's a wide set of businesses in place within the automotive domain. On top of it, it's the non-automotive piece also that comes in, which is the information technology piece, the logistics, the aerospace, and so on. And hence it's a much wider platform now that the minority shareholders will get access to, which was so far residing in SAMIL, but now every minority shareholder can participate in this. Thirdly, from the growth perspective itself, with Sumitomo now becoming part of domestic wiring harness business, the overhang that Sumitomo had on the growth plans of MSSL will now no longer be there. And hence it will be able to charter a path much faster, much stronger in place. And if you see how our balance sheets have played out, we are a much stronger organization as we stand. And hence be able to capture a much larger share of growth going forward.
Absolutely. Good luck for all of that, and happy to see Motherson Sumi scale new heights as well. Thank you, Pankaj. Thank you, Mr. Gauba, and thank you, Kunal, for joining us on the show. Pleasure always to have you. I hope you guys enjoyed the conversation as well, and see you soon and stay safe.
Thank you very much.
Thank you very much.